Hello, everybody. It's Dylan Milks here for Tuesday, May 15th, 2012. So, what I want to talk to you about today is gold and silver and basically the just the crazy moves down that they've been doing pretty much for the last 8 months or so, but really it's really been quite intense the last couple months now, just a continued decline of gold and silver. So first of all, I want to touch on what are the reasons why there's been this major correction in the gold and silver market. Well, mainly it's one word: Europe. And as the debt crisis in Europe continues to drag on and on and on without any resolution in sight, um, what's happening is that people are viewing the U.S. as as a safe haven for their money. So now that typically what happens now is that people are flooding out of gold and out of other asset classes such as stocks and moving into U.S. dollar denominated assets such as mainly U.S. government bonds. And as this happens, the U.S. dollar gains strength. Thus, um, it offsets the price of gold and silver. So really, people have been really selling gold, silver, and moving, and not only that, but stocks as well, moving into U.S. Treasury bonds. So now, of course, the consequence of that is, of course, that the yields on the bonds are going down, continue to go down, which is going to mean that quite possibly we're going to see even lower interest rates on mortgages over the next little while the Greek crisis continues to go on. So that's really what's been going on. Again, Europe is the key here, and as long as people are moving their money from Europe, from other countries around the world, from other commodities or other asset classes into U.S. treasuries, U.S. debt, that's going to continue to put downward pressure on gold and silver. Now, the next question is, how long is this going to last? Well, that's a very good question. In all honesty, I really think that this could be, for the way things are turning out here, this really could be another year and a half, 2 years really of declining or real stagnant gold and silver prices. And the reason why I say that is because if you look at the horizon, there's really no immediate fix or immediate resolution, or even I would say an immediate crisis in the European debt situation. So in my mind, until a major crisis hits, I still will continue I continue to see gold and silver declining. As there's more uncertainty in Europe, as there's more instability, as there's more bad news that comes out day after day after day, and after the politicians in Europe continue to try one band-aid solution after another, that's just kicking the can down the road. And until that time comes, I think that in the short term, we're going to see continued decline of gold and silver. Again, I don't have a crystal ball, but at the rate that things are going, I would say I would not be surprised if another year and a half, 2 years of either declining or stagnant gold and silver prices. Now, the other thing I want to bring to light here on this is that, of course, gold had gone up 11 straight years. 11 years in a row, gold had gone up, and silver had gone up 10 years in a row. And we're not just talking about going up like as in they gained 5%. It was gaining substantial gains for 11 straight years. That's what gold was doing. So to me, when you take a step back and you look at this from the big picture, we're still on an upward trajectory. I think the situation in the world with the debt problems, the demographic problems, the economic problems, they're in no way going away. And really, I think that Europe, I believe, is just a warm-up for what we're going to see in the United States, probably in the next, who knows, 3 to 5 years. Is what I believe, that we're going to see similar, if not worse, problems as what we're seeing in Europe happen in the U.S. So again, for those of us who are in gold and silver, in any of the precious metals for that matter, or even for that matter, who are people who are in the mining sector, the mining stocks, the gold mining stocks, or the silver mining stocks. I think that we're definitely in for a really, really rough ride, a real bumpy ride. But I think that if we hang tight and we continue to, again, look at the big picture, look at the 50,000-foot level of where things are going, I think that we'll see, when all this is said and done, I believe we're going to see this last 8 months, and in fact probably the next 6 months to a year, we're going to see this as just a little speed bump in the road. So I'm just encouraging everybody, just continue to, every month, when you have whatever extra money you have, buy some gold, or if you can, or buy some silver, whatever it is that you can afford. But just buy something, slowly accumulate during this down period here. And for me, the one thing I'm not keen on at all is market timing. Some people might say to me, well, Dylan, why don't I wait and time it till it hits the bottom? You know what? I don't believe in market timing at all, because 99% of people who try to time the market, they time wrong and they lose. And sometimes they even lose big time, and they miss out on great opportunities. So my view is just simple. You know what? You got a few bucks at the end of the month, buy some silver, whatever it is. Just slowly accumulate during this down phase, and just continue to do so. And I believe wholeheartedly that when you look at the big picture, when we take a step back, and in 5-10 years from now, we're going to be glad that we continue to buy during this down period. So thanks everybody for watching, and have a good night and take care, and I'll see you again soon. Bye for now.